I'll just quickly run you through what the trade setup is looking like as we start a new week. And we're winding down the year as well, right? I mean, slowly but surely we are, although the market is throwing new things at us. Not completely new, but newer. So the main theme globally remains two. One is disinflation. Inflation is coming off sharply. You can see that in data. But at the same time, interest rates are going up. And you've got potential recession in 2023. That is the second part. Potential recession is that feeling is getting stronger and stronger on various matrices. On Friday, just to kind of hammer in that point, you had the US PMI number, which came through, composite PMI at 44.6 as compared to 46.4 in the month of November. That's, I mean, a comprehensive miss, both on manufacturing and on services. It was a miss. Even then, you had Fed officials three Fed officials, without going into details, all focused their comments. This is during the intraday session on Friday in US, focused their comments around still too high inflation and how things need to be done. More needs to be done. And that's the combination I'm talking about. Inflation is coming off, but you've got, central banks very much focused on taking rates higher from here and then keeping them higher, at least right now. Market action in terms of market interest rates, look at the 2-year, the 5-year, the 10-year, disinflation. 19 basis points on the 2-year. This is week on week, Friday on Friday. 5-year down 16 and the 10-year down about 7 odd basis points or so. So that's the setup in the US. By the way, the S&P, and we can talk more about this later, is also poised very delicately at an important support level, which we'll talk more about. But let's come to the Nifty here. The Nifty saw follow through. Thursday saw selling. Friday we saw more follow through selling on the index. We've closed marginally below the 40-day exponential moving average, a marginal close. So I think we need to watch how the market kind of behaves after the open. SGX, I think, is indicating a slightly higher start. But the level, the level to watch is the November lows, which comes in at about 18,133. It's not very far away. Given how the market fell on Friday and Thursday. So 18,133, will we go all the way, or before that, buying will emerge? One needs to watch out. Bank Nifty also, on Friday, it's been the stronger of the two indices, closed marginally below the 20-day moving average. And to boot, it also had not a rare, but it's been stronger, as I said. It had a negative weekly close, the Bank Nifty. So for the, if unless and until it keeps its head above the 20-day, it comes up above the 20-day and stays there. On the downside, the move could extend all the way to about 42,383. So this is, some levels to watch out for. Above the 20-day moving average, the move can extend to about 42,383. The 20-day remains very, very crucial for the Bank Nifty. So we're going to start on a flattish, slightly higher kind of note, and we'll pick up the pieces from there. Reema, hi.
Hi, Nigel. Hi, Prashant. The US markets continue to have a rough session on Friday, so the slide continues. And for the week, the US indices were down 1.6, going up to a 2.7% loss for the Nasdaq, posting their second straight weekly loss since September. For our own markets, in terms of the flows, big selling seen by the FIs. The FIs sold nearly 2,000 crore in the cash market, while the DIs bought about 1,540 crore in the cash market. This, by the way, by the FIs is the largest that we've seen in the month of December so far. Month to date, the FIs have sold nearly 7,500 crores, while the DIs have bought about 10,500 crores. So the DI buying so far, at least, has outweighed the FI selling. But as the year draws to a close, there are fewer and fewer cues that we will be tracking. The RBI MPC minutes will be published on the 21st of December. That's Wednesday. The US Q3 GDP print will be tracked very closely. That's on Thursday. And we've also got home sales. So after the disappointment that we got on retail sales, as well as, the PPI index, the PMI numbers last week, the economic data coming out of the United States will be very crucial this week. Two IPOs open up, KFin Tech, and the other one is Elen Electronics. KFin is a larger one, 1,500 crores is what they're looking to raise, but it's going to be a pure offer for sale. Elen Electronics is looking to raise about 475 crore, of which 300 crores is an offer for sale and 175 crores is going to be the fresh issue. So some primary market action as well to track. Hi.
Well, that's right. Just a quick recap of Friday's trading session. The call that we made at around 8 a.m. on Friday itself was to be a little bit cautious, and that played out because the rallies got sold into. The Nifty ended virtually at the low point of the day. We pull up the intraday chart out there. And the mid-cap index, well, that got clobbered actually. That was down closer to 1.6% also. It was a big underperformance coming in from the breadth of the market. The saving grace was the Nifty Bank ended closer around the 20 DMA. What are the cues we got then? Well, in terms of, the FIs, well, they unwound some positions. So they unwound both longs as well as shorts. But shorts, they closed out close to around 5,000 odd contracts. They continue to remain net long on the index. But overall, for the market, on the Nifty and the Nifty Bank, there was some unwinding of positions. And that's why we did end lower. On the option side, well, they were pretty much mixed. So let's look at which were the active strikes in Friday's trading session. The 18,400 call, 18,300 call. The total open interest between them is closer under crore shares. That's telling you there was writing at those levels. And you plug in the premiums, and that will tell you that the 18,400, 18,450, that becomes the first resistance zone. So keep an eye out on that front. At around the 18,000 put, though, that's opened up in terms of, some kind of cushion. If things go wrong, then there is some put buying that's taken place as well. So what are the levels you're looking at? Well, on the upside, the 20 DMA, that's going to be a firm resistance out there. And my sense is a fresh breakout comes only once we get past that level. Don't chase the opening gap up. That would be a more prudent strategy. Instead, if you get a dip closer to the 50 DMA, well, with a strict stop loss, maybe in fact you could try to go ahead and buy the Nifty closer to the 50 DMA. For the time being, it's far away from there. On the Nifty Bank, it ended closer around the 20 DMA. Well, the 43,500 call was very active. That's giving you a sense that there was writing out there. It ended closer around the 20 DMA. The Nifty Bank, that's the joker in the pack. It holds the key for today as well. Can it do an Mbappe, and come out there and play a good innings? Good game, and in fact, maybe still end on the losing end. That's going to be important. For starters, SGX Nifty suggests a bit of a gap up.
Okay, it's actually a mixed picture coming in from Asia this morning. Hang Seng is higher by about 0.4%. Straits Times is up nearly 1%. But on the flip side, weakness seen in the Japanese as well as the Taiwanese markets. The Japanese markets are down close to about 1%. Taiwanese markets lower by nearly 0.3%. So it's largely mixed across the Asian market screen this morning. Let's get you some equity calls then. Christopher Wood of Jefferies says last week's FOMC press conference following the widely anticipated 50 basis points rate hike in the Federal Reserve funds rate to 4.25 to 4.5% contained a few bombshells. Though Powell, the former reverse walker, tried to sound hawkish, arguing that it will take substantially more evidence to give confidence that inflation is on a sustained downward path. He says, as for the Fed's latest dot plot, there is no rate cut projected by any Fed governor for 2023. But greed and fear would bet against that.
Well, let's get you some money market views as well. On the rupee, B. Prasanna of ICICI Bank says hawkish guidance by the Fed and the ECB has dampened the risk sentiment and supported dollar in general. Rupee was under pressure from the dollar buying by RBI and offshore hedging flows. Bhaskar says currencies are expected to remain range-bound at the end of this calendar year, and he expects the rupee to trade in a range of between 82.1 to 83.1 range this week.
On bonds, Bhaskar Panda says despite a hawkish FOMC which reiterated higher rates for longer, US yields softened last week owing to lower inflation prints. In India too, domestic inflation eased, but government bonds remain under pressure with continued supply and tighter liquidity conditions playing spoilsport. He expects markets to trade sideways with the 10-year benchmark yield in a range of 7.2 to 7.35%.
Well, we have a lot of stocks-specific action to track for you today, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Yes Bank, L&T, Ashoka Buildcon, Shilpa Medicare, Specialty Restaurants, IGL, Phoenix Mills. They are stocks on the back of positive news flow. However, on the flip side, we have Nifty IT Index, Sun Pharma, and JMM Pfaudler. Well, they could open up in the red.